Well, good evening, everyone. It's such a pleasure to be associated with Voyage. Every year, we look forward to just engaging with the members of Birla Mutual Fund family, fellow investors, and just to get a sense of how exciting things have been in the investment world. Normally, I would start the first session in Voyage, but this time perhaps the organization has told me to do the last session of Voyage. So things are indeed changing, as you can see. And I've got somebody from the Dalmia family also on the panel today. मेरी मुलाकात इनसे कल ही हुई ब्रिजेश जी से. Trust me, we don't have any family tree collection, even though his firm's name is Dalmia Wealth. Brijesh ji, I'm looking for that wealth. बिरला म्यूचुअल फंड में ढूंढना पड़ेगा लगता है. देखिए, जब वेल्थ शेयरिंग की बात आती है, डालमिया जी म्यूट पे चले जाते हैं. अब म्यूट पे साहब.
I'm saying that you have enough of it, and I think I can help you enhance it.
We'll talk about it. We'll talk about what is the best way to create wealth, generate wealth, and not to destroy wealth in this kind of a mutual fund market. But just tell us about your journey. Tell us about what kind of clientele you are associated with. Tell us a bit more about Dalmia Wealth, and tell me rather, how can you help me generate wealth? The last part was very important.
All right. So, Nikunj, we have been into this for last 20 years. And God has been really kind. The industry has been really kind that, things have moved in the right direction. Maybe we were lucky we were there at the right time, at the right place. And we started our journey with mutual funds, and our clients started with small investment. And thanks to all the AMCs and the markets that they have done so well, and mutual funds have been able to preserve the wealth as well as enhance it. And so our job was made much easier, and the journey has been fantabulous. Clients have made very good returns. We have been happy along with the journey. There have been ups and downs, 2008, 2013, 2020, but all of that has been taken into stride because the returns that have been generated and the confidence of the client in mutual funds every single year is going up, and the panic is going down. And mutual funds as a product has been established in the marketplace. Of course, we have a long way of adding more number of folios and KYCs, but I think the journey has been fantastic, and I think we can. It's just the tip of the iceberg as we stand today, with much more growth to come. And as far as the Dalmia Wealth is concerned, we are a kind of a boutique mutual fund distribution house where we have around 150 families. Most of them started as retail, but now they have grown as some superpower at the national level, and they have decided to stay with us. And probably they are happy. And what we do is that I think when I look back and say that what did we do for our clients? So I will say that rather than giving them fantastic returns, we have been able to preserve their wealth. We have been able to make sure they do not make many mistakes. And because they did not make mistakes, they have been able to create wealth. And that is our contribution to the entire journey with our clients.
Wonderful. So you've helped people preserve wealth, but if I want to create wealth, how will you come? How will you help?
No, my job starts after you have probably on the journey of creating wealth, because so I'm not into backward integration. Maybe I'm into forward integration.
Rajesh, tell us about your firm. How many years you've been in this business? What kind of clientele you are currently servicing and associated with?
Nikunj, though I had been to this financial service industry for last 29 years, but I founded this Midas Finserv 7 years back. Before starting of this Midas Finserv Private Limited, I had been associated with various reputed organizations like Tata Mutual Fund, ING Financial Services, Master Capital, at various reputed senior positions. Midas Finserv Private Limited is a boutique wealth management company, and which is serving more than 1,500 families and helping their financial goals. We are using both kind of the product, like asset-based and liability-based product. So on the asset side, we use like mutual fund, PMS, AIF, life insurance product as well, ULIP, fixed income, term plan. On health general insurance side, like health insurance, On the loans liability side, we take the loan portfolio of the client to meet their short-term or long-term loan requirement like home loan, loan against property, business loan. And as far as my journey is concerned, I'm very satisfied. Spent over the time spent in this industry, as Mr. Dalmia said, thanks to the market, thanks to the various AMCs, thanks to the fund managers who help the clients not only to preserve wealth, but also to create wealth. Of course, I am a very lover of equity. I am a technical analyst by profession also. And we have a strong research team, which is our USP as well. We help the client to create wealth in this environment, and with our strong acumen to the equity market knowledge and the research, we help the client at various intervals. Though we stick to the basic principle of investment, but at times we also make use to preserve the wealth at different intervals like 2018, 2020, or also go aggressive on the equities when the market provides that kind of the opportunity.
So investing in a mutual fund is thinking years and decades. Technical analysis is thinking minutes and hours. The quarter is a dial of a quarter, and for SIP investor, a quarter is like at least 25 years. So how do you manage both?
Sir, of course, you said we follow the basic principle of investment only. There's then defining the goals of the client, sticking to their financial asset allocation, sticking to the financial goal, and using the technical analysis only at times to make the tactical allocation or to tweak certain times. Like, for example, in October 2020, when the market has a sharp run up, and like when the Nifty was trading around 18,500 or so, still there you get the client, their money has to be invested. And a lot of people are looking for the lump sum investment. And then, when the markets are high, everybody wants to make quick bucks in the market. At that time, to control the behavior of the investor is very important. At that time, our model was suggesting it's not time to go aggressively on the equities, be slow. So we use this STP method at that time rather than to go aggressive on the equities. And similarly, like just in March first week, when the Ukraine war is on, markets have taken a sharp dip. Then we were very aggressive on the equity, and we went out with strong communication with the clients to go aggressive on the equities and make the lump sum investment. That's the next only use of the technical analysis. Otherwise, it has to be the basic principle of investment.
Wonderful. Mr. Navlaki, tell us a bit about your firm, your experience, and again, the client profile which you're servicing.
Yeah, hi Nikunj. I started Money Matters, as it was called then, in 2001. Came out of pink slipped in the job market, so pretty much forced to start off. Didn't do it by choice, but I had a first few set of colleagues who had invested with me, and then realized that this is a lovely business to be in. A couple of things that have helped us through the years have been that, one, act in the client's interests always, and two, try and educate them so that they become aware about things. We don't use jargon, we try and simplify things. And I think over the years, we have been fortunate that we've been allowed by our clients to learn from our mistakes. 2008 crisis, at that time, we realized the importance of risk profiling, because many clients, we sort of followed their sort of push to increase equity in 2007. And when things turned bad in 2008, they said, oh, you know us from so long, how come you allowed us to increase equity? And thereafter, we decided that we will follow risk profiling and asset allocation very, very seriously. As a result, I think as a firm, we have not exceeded maybe 60 to 65% in equity at any point in time. We might have gone to 50% in equity overall. While we deal with all types of clients, we realize that we can make much greater impact on people who are sort of have the ability to invest in excess of 3 crores of money, at least head there, because then we can give them the variety of products that we are capable of giving. In 2005, along with the time when I completed my CFP, I think Brijesh and I finished CFP together 2005, where we didn't know the F of financial planning. And I think we've learned along the way. And around that time, we converted my firm from a proprietorship to a private limited company. I just started visiting the US on conferences. So thought international will be a good flavor to add to the name. And in a way, I've been forced to make sure that, keep up in pace with whatever developments happen internationally. So we were very early, I would think, in trying to tell clients that they need to have international allocation when you look at asset allocation. Of course, the range of products that were available maybe 10, 12 years ago were very limited, only feeder mutual funds it started off with. But now you have the whole range, including platforms, investing through liberalized remittance scheme, etc. So happy to be in that space. And, we again been fortunate by the set of clients early on who told us that, you're doing something extra, why don't you charge fees? So we were fortunate to start charging fees to clients in 2003. And then over time, we have continued doing that. So when RIA regulation came, we did license ourselves as RIA. When they allowed RIAs to get clients to invest in direct funds, we have moved clients into direct funds. So most of the investments that we manage in mutual funds is direct. And we charge fees. And yes, it is difficult in years when markets don't do well to get the fee, but we have to tell them that and remind them of the good years and say we didn't take a big fat piece of your pie at that time. So yeah, it works that way. Now have been in business for 20 plus years and are present in 5 locations. We have a 50-member team. So there is that task of even managing team apart from managing clients.
Well, you've created a franchise. Congratulations. With the same question, we would love to understand how many years of experience you've had, what kind of services and what kind of clientele do you deal with? Mohit?
Hi, Nikunj. Good evening, everyone. And look, so I, Nikunj, typically track my lifespan in this industry alongside the industry itself. So I started in 2005 when the AUM of the industry was 2 lakh crores. And that time I started my journey with Citibank. I was there for 10 odd years. Then I moved on to HSBC, and 2016 is when I cut off from corporate life. And we started our own journey and charted a platform called Moneyfront. So that time the market was around 16, or the AUM of the industry was around 16 lakh odd crores. So in proportion to the industry, I've been making my moves basically. But in 2016, when we started, Nikunj, we were the first digital RIA platform in the country at that point in time to offer completely digital paperless solutions to clients under an RIA license, basically offering direct plans as Lavai also kind of mentioned, basically. And since then, our journey has seen many ups and downs, many twists and turns. Along with regulations, we have also tried and evolved our practices, our efforts to service our clients. As I'm talking to you, we have been lucky that we service around 20,000 plus clients across some 985 cities in the country, in this country today, and across some 16 cities globally, basically because of our digital reach. We also have a unique unit of boutique advisory, where we service some large family offices and corporate clients on the treasury front, basically. So we have a mass and a mass affluent segment which transacts or which interacts with us completely digitally because of our platform and services. And we have a set of clientele which is more boutique in nature, where we offer complete range of our advisory services, basically. So that's been our model. And happy doing this journey of investments and learning along the course and interacting with clients. That's been my passion all through.
With the new India, which we are talking about, is the millennial India. People are shifting their asset allocation, SIPs have started. So today, the market, what we are staring at is perhaps not because of the old timers who are putting more money, it's the new Indians who are not going towards fixed deposits. When you talk to your clients, are you also getting a sense that this is a long-term, multi-year trend?
Oh, totally, Nikunj, totally. The kind of changes in the dynamics which I'm seeing on the ground, the pulse of it is very, very different than what I saw like 15, 16 years back when I started this journey, right? So today, everyone is in a fast track mode. Everyone wants to retire early, and that's something. So our my pet pitch to our clients is, look, you working from 9 to 6, basically that's your active income, but what about your passive income? Unless you build a kitty of passive income which works from 6 in the evening till another day 9 in the morning, right, then you're really not building something out for yourself. And that pitch particularly has worked very well with our set of investors, basically, who wants to create a passive set of income, who are in that fast track mode to retire early, who want to interact with us more digitally, basically, and who want to explore different types of assets and different types of offerings, basically. So yeah, you're right. I think the demographics, the patterns, the behaviors, the psychology behind investing has changed dramatically, and the trend of investing in FDs and gold and everything has gone through phenomenal change and shifts, I would say, right? Incrementally, I come along clients who are in that age bracket of 50 plus kind of age brackets, and who no longer want to invest in fixed deposits or NCDs. They're looking for different avenues. They're looking for mutual funds because they've heard so much about it, right? We have to actually hold them back at times and tell them that you have to create a proper asset allocation and move alongside both debt and equity and preserve your capital also. So at times it gets tough, because everyone seems to be in a rush, and that's more because of the market trend and the movements recently. But yeah, you're right there. The behavior and the psychology behind money has changed completely.
But Rajesh, we are feeling very happy. I remember when we were doing the first edition of Voyage, the most important trend was that we would track the FI flows. More than earnings, we would track the flows. Today, FIs have been selling in Indian markets are not even sneezing. There was a time when FIs would sneeze and we would catch a flu. That's largely because of domestic investors. Now you have the pulse of the market. Aapko kya lagta hai, Rajesh ji? This entire SIP flow, money into balance fund, money coming from FD to equities, that's a multi-year trend?
Of course, Nikunj, as Mohit has rightly said, there's a complete change in the human behavior, in the investment pattern of the client. मैं आपको छोटा सा एग्जांपल बताता हूँ. 25 years back, जब मैंने इन्वेस्टमेंट जर्नी स्टार्ट की थी, तो मेरे को याद है हमारे घर में हमारे रिलेटिव के घर में लड़की गर्ल वाज बॉर्न बस, एंड दे सेड कि दादी जी ने कहा था कि इनकी ना एक LIC की पॉलिसी ले दो, कुछ FD कर दो, बिटिया की शादी के लिए पैसे काम आएंगे. तो देयर वाज अ टाइम एट दैट people used to follow the traditional way of investment, and those were only fixed deposit, or the buying LIC policy, or people have some more money buying the property or plot and etc. But nowadays I feel differently, total different behavior. People come and ask for the mutual fund. They understand the equities. People, even the new generation, right now I'm being approached by a lot of young guys who have just recently started their jobs and they started their career. Even they're looking for the direct equity. Even they just all want to make quick bucks in the markets, and they're not afraid. Even I'm sometimes, Nikunj, I'm just get perplexed. Young investor buying call and put and asking me certain times of the guidance about the call put options. Even they all are in hurry to make quick money, where we have to teach them the basic principle of investment, and they have to stick to their asset allocation plans. So a lot of things have changed, and definitely this is the change in the human behavior which has helped the Indian market to recover from the sharp, this strong sell-off from the FIAs. I had seen the markets making bottoms at different periods in last 2 decades when the FI were the net seller, but at that time FII were forced to turn buyers at the higher level, because for last full months of February or in the early March, we have seen the FI were consistently seller. In fact, since October, they are the consistent seller, and they are now turned the buyer. And in the last leg of the rally, they have turned buyer, and it is just because of the change active retail participation. And this we were anticipating for last couple of years, because now we see a lot of retail investors saying no interest in parking their money, making fixed deposit at 5-6%. They don't find any value. Now they have understood the role of the inflation, and they don't want to not only preserve wealth, they want to create wealth.
Rajesh, why do you think ऐसा हो रहा है? Why do you think that there is a shift in approach? There is a shift in portfolio planning. ये गंगा अचानक उल्टी क्यों बहने लगी है, ब्रजेश? वो मीडिया को थैंक यू बोल रहे थे, मीडिया ने स्प्रेड करी है, म्यूट कर दिया, दोबारा बोल सकते हैं.
Okay, so in my opinion, I think the emergence of nuclear family is one of the biggest reason why people have started thinking that savings and investments are very important, because now they have to take care of themselves. The other thing is that they have witnessed the growth of the equity markets and the investment market in the country. They have seen that their friends, colleagues, relatives are making tons of money in their investment portfolio, and so it's catching fire. People have experienced investing over the years, and thanks to AMCs as well as the distribution fraternity, they have been able to reach out uh, in scale in crores of families to tell them the power of investing. So I think it is irreversible. Now people have understood the concept of investing, and the job, I remember 20 years ago, I have to tell them what is mutual fund. Then I have to tell them after 2-3 years what is SIP. And then, now, and then I have to tell them what is debt fund, why you should invest in a debt fund. Now the situation is this, that if bank FD is giving 5% and the client is getting 4% in a debt fund, still they come to say that let us go for the debt fund. It is convenient. It is easy. I don't have to do anything. There's a gradual shift that the thought process of the investing public is changing because of the maturity level. And I think, as Rajesh ji said, and as Lovai said, I mean, there's a huge, huge difference in the sentiment of people. For example, this Russia-Ukraine war, we did not get a single call from a single client in terms of what is happening. They are so okay with it, क्योंकि मार्केट नीचे जाएगा, मार्केट ऊपर जाएगा, SIP बढ़ा देते हैं और पैसा डाल देते हैं. 10 years ago हमारे पास ये कॉल नहीं आता था, बाजार गिर गया तो पैसा डाल देते. अभी क्लाइंट सामने से फोन करके बोलता है कि बाजार गिर गया, is it the right time to invest or not? So I think this nuclear family concept, the emergence of market 50,000-60,000 index, people, there's a feeling of losing out. If I'm not there in the market, if I'm not investing, I will miss out on something. So all these factors are contributed to all these things.
Sumit, I can see you on the preview. I'm trying to understand the expression on your face, Sumit.
I'm impressed. This is great. This is great things that I'm hearing.
Vijesh, so while it is good that markets have fallen, people are not cancelling their SIPs, whether it is the approach, attitude, education, awareness, returns, which have genuinely made people wealthy and happy. My question, Vijesh Bhai, is last 2 years have been more like a Goldilocks scenario. Whatever you've bought, you've made money. Now is the testing time. Debt can the return compromise hoga. Equity markets may not give you the kind of stellar returns what we've seen. So what are you telling your clients now? 3 years, 5 years, and 10 years? Rajesh?
So this is a very interesting question, and I will tell you exactly how I think and what I think. Over the last 10 years, not in the first 10 years. So this is my 20th year in the markets, let's say. So the first 10 years, I thought I am smart. I know how to make money. And the last 10 years, I have become wise that I don't know how to make money. I know how not to lose money. And that has helped me create more wealth for myself as well as my clients. So making less mistake. And why I say this is that last year also, January, I thought equity markets will not give a very good return in the next financial year. Last year, I thought debt market will not be very good. For the first, equity market gave phenomenal returns last year also. And if we take out the Russia-Ukraine war, it was even better. And debt market for the first 9 months gave fantastic returns. Only in the last 3 months, they were not very good. So I went completely wrong last year. This year, again, I think that, the markets are very high and debt market is bad and returns will not be there. But this market has the tendency to surprise everyone. And now I behave in line with the market, that I will accommodate, adjust my strategies along with my client. Whatever market is there, I will behave like that. But to answer your question, I fundamentally believe that Indian markets are trading expensive. They have been trading expensive. The media always tells us that, Indian market gets a premium because of blah, blah, blah factor. But I have this fear that at some point of time, maybe 1 year, 3 year, 5 year, or 10 year, Indian markets will align. This growth story of 20 years will not last 200 years. Somewhere it has to align with China or America or other European countries where, stock market returns will fall in line with the economic growth of the country, which will not be so superlative for the next 50 years. Even if they are, even if we achieve such growth, the price multiple of 25 or 28 or 22 is not sustainable over 10 years, 15 years from now. So as the economy of India matures, your price earning का जो फंडा चलता है वो घट जाएगा. So I fear that unless you have a proper asset allocation in these times, even if the markets are going one way, we must have a debt equity ratio gold allocation, and you should not go overboard in equity. I'm a believer in equity, but not an over believer of equity that it will always perform. So one has to be very cautious, and this philosophy of Indian markets are cheap at all levels, I do not subscribe to this. So I'm very cautious even in this market. I'm telling my client, look, if you want to invest for 10 years, come on in equity. But for 1 year, 2 year, 3 year time, you will always need to have a proper asset allocation. Don't go overboard for 2-3 years at all.
बहुत बढ़िया बात है. I think risk and understanding of asset allocation is very important. Maybe we have a very large, attendee panel here. तो एक ओरिजिनल लाइन है जो मैंने थोड़े दिन पहले सीखी है कि your birthday comes once in a year, but stock market में correction बार-बार आता रहता है. So we must remember that, but there is a difference in volatility and risk. And I think Lambi FD, which is what we talk about for equity, I think I personally feel that we have a long, long way to go. But asset allocation creates 80% of the value. You're absolutely right in that. And that is what saved people in 2020 when equity allocation had to be increased. Navlaki ji, I want to ask pretty much the same and the obvious question. What are you telling your clients? And आपके पास जो एक broad advice है, or what is the best asset allocation? What is the best strategy for 1 year, 3 year, 5 year, and 10 years?
So I will take the analogy of milk on a chula. जब भी milk उबालते हैं ना, तो even if you put it slow, it will keep boiling and it creates cream. तो जब भी cream बनता है, वो थोड़ा निकाल दो, तो new cream can get created. If you don't take it out, you are not going to get the cream. So I think that's the logic to follow in markets, that, to the extent that you fear that the milk will boil over and some of it will get wasted, somebody else will get it, whether it is tax or, notional laws or actual laws. Then you keep taking out the cream and make sure that the level is such that it doesn't boil over. So that's a simple logic that one needs to follow. And when you need to actually take out the milk to add to your tea or coffee or drink milk separately, take it out. So link that to your goals. When I need that goal, I take out that milk from the bartan and put it into the glass. Then I'm using it and I'm enjoying my tea and I'm not worried about it. So milk गिरेगा.
मैं green tea पीता हूँ और मैं आजकल vegan हो रखा हूँ. तो मुझे क्या करना चाहिए?
हाँ, तो then you think about it. You drink beer or no?
अब वो इस पैनल पे शायद teetotaler ही रहे तो अच्छा है.
अच्छा, ठीक है. तो let us think about sharbat, right? Imagine that there is a tanki of sharbat or plain water. Let's say water is good for everybody. Let's take water. And there are different sources or different pipes going into that tanki which fills up your water. So you might have active income, you might have dividend income, you might have rental income, you might have different sources. Somebody is giving you a gift, Brijesh is transferring some wealth to you, whatever methods, right? So there are different pipes and it fills up your tank. Now you imagine in that tank, there are different taps. When you go to a wedding, you find that, big tanki with lot of taps where everybody can wash hands together, right? So imagine that each tap is for a different purpose. One thing is for your child's education, one thing is for marriage, one is for going for movie, different thing. So each of these taps you can open to the extent that you require. If you're going for a movie and you're going with your spouse, then 2 tickets, you have to take out only 2 tickets ka water. No? You don't have to take out more. If you're educating your child abroad, then you have to take out a lot more water and so on and so forth. So unfortunately, what happens is that everybody treats that entire pool as one, that whole tanki as one, and say, "Arey, mera market upar ho gaya, market niche ho gaya." Actually, that's not what has happened. There are compartments within that tank which you are not seeing, because each of these taps is connected to a compartment, and you put only as much water in that compartment as you need. So if your child's education requires a certain amount, only that much should be filled in there. But you can draw it at later points in time. Or at least you know the capacity of the tank, even if you don't have the water today. So when you get the water, you know how to fill it. So I think this is what life is. And, unfortunately or fortunately, in that tank where you have defined, let's say I have these 5 or 7 taps, suddenly one 8th tap will get introduced because some relative suddenly required money which you felt that you should give. So it was not part of your original plan, but now you've had to add a tap to this. So something else will get compromised. But at the same time, the speed of the water filling the taps will change. You will get a lottery like this 2 year in the market, as you mentioned. So make sure that you keep that extra water somewhere safe so that it is usable at some point and don't let it spill over. I think that is essentially what asset allocation is all about. That is what investing is all about. And then you have to just deal with the emotion of the client, which is the most difficult thing, according to me. Market is not difficult, ups and downs are not difficult. Holding the emotion of the client and making him become aware about certain things. And I think the biggest issue I face, at least, and I tell my clients this, sometimes they don't know that they don't know. And that is the most difficult part. If they knew that they didn't know, it is easy to explain to them what we think we should explain. So that I would think is the way to look at markets. I don't pay attention to the noise of whether it is 59,000, 50,000, 75,000. For absolute terms, inflation adjusted, market will always go up as long as you keep the base as 100, 1979. वो तो ऊपर ही जाएगा. I mean, people say, I'm surprised that it reached 50,000. When it was 20,000, I thought it will never reach. Now I'm saying you should not be surprised it reaches 1 lakh, it reaches 2 lakh, 3 lakh. The question is when and whether you are going to take benefit of that increase. So I agree with Brijesh that you have to be cautious. Don't get greedy because when things are going right, it seems like I don't need any advice. I can do it myself. जहाँ भी मैं arrow या dart shoot करता हूँ 100 points ही मिलते हैं. So the whole board is one bullseye. But at some point, your vision improves and you start seeing only the middle is bullseye and everything else is minus points. So keep that in mind.
The equity market is ultimately buying purchasing power. मैं दो examples यहाँ पे share करूँगा. When I moved to Bombay, I used to have a coffee for 5 rupees. Then it became a branded coffee of 50 rupees. And sometimes when me and Sumit, we go, we enjoy a cup of coffee for 200 rupees. In 20 years, the coffee price has gone from 50 rupees to 250 rupees. And Sumit knows that if I'm paying the bill, he'll take an extra chocolate and an extra large cup. So 300 rupees हो जाता है because it is nothing else but by buying future purchasing power. Another example which I would love to share with everybody here, just for the benefit of the attendees here is, and this is a real life story. I happened to join television journalism in 2000. And this was exactly 1 month before 9/11. So here I started my television career and the biggest crash in the stock market happens. But in the last 22 years, I have reported assassinations, government change, 9/11, 2008, 2020. But I've seen the magical journey of Sensex. Nifty की तो बात भी मैं नहीं करता हूँ. 3,000 से 60,000. So that is what markets are, and that is what markets can do. So Mohit, अब आप बताइए, 1 year, 3 year, 5 year, 7 year. What are you telling your clients to do?
Look, so Nikunj, I kind of agree with Loai said, basically. And to me, I think the biggest message which we pass on to our clients is twofold. One, obviously, we keep harping to the point that if you keep money in your savings account, it will never make you rich, right? So you have to do something with that money. You have to earn that extra income, or you have to make your money work for yourself, right? So you have to try and figure out sources and avenues to build your passive income and to make your money work. So that's point number one. Point number second, which we keep harping on and which we keep believing is that the reality is somewhere in the middle. It is never in the extremes. अगर आप देखें आज से 2 साल पहले आपने नेगेटिव में ऑयल को देखा है और आपने अभी $150 पे देखा है, आपने एक बार $200 के आसपास भी देखा है, राइट? तो ऐसा नहीं है कि $150 या $200 पे सब कुछ खत्म हो गया, दुनिया बर्बाद हो गई, इंडिया खत्म हो गया एंड यू वेंट एब्सोल्युटली रेड ऑन योर पोर्टफोलियोज. वो भी नहीं हुआ. और जब ऑयल नेगेटिव चला गया था, राइट, एंड इट वाज अ शॉकिंग इवेंट, इट वाज अ न्यू लर्निंग फॉर एवरीवन ऑफ अस, स्पेशली फॉर मी एट दैट पॉइंट इन टाइम. तब भी ऐसा नहीं था कि दुनिया में कुछ चेंज हो गया या इंडियन मार्केट डबल हो गया सडनली बिकॉज ऑयल इज द बिगेस्ट बेन फॉर इंडिया, वी कीप हियरिंग, राइट? तो कुछ भी नहीं हुआ ऐसा. So my only thing, and that's what we keep repeating to all our clients, is that truth lies somewhere in the middle. never react on extremes. वो बहुत euphoric way में अच्छा भी हो सकता है and extreme scenarios में गंदा भी हो सकता है. You have to ride through this journey, and asset allocation perhaps is the only way that you ride through this journey in a smiling way, right? और आप अपने goals define करिए, आप लंबी तरह से उसको इन्वेस्ट करते रहिए and just keep believing in that power. In a nominal term, the market will keep going up. That's what Lovai said, and that's a fact of life, right? Inflation and the way central banks are printing currency, this market is not going to come down in a nominal term, right? In real terms, we can always argue कि earnings से adjust होगा, valuations थोड़े से nominal हो जाएंगे, valuations will revert to the mean and so on and so forth. But in nominal terms, it's a perma bull market, right? So you will keep going up because inflation will keep inflating the global economies, and you'll keep losing the value of your currency, and it will keep and to fight or to adjust to that inflation, you will have to invest in assets which will beat inflation year on year, or which will at least counter inflation handsomely. And uska और कोई answer नहीं है निकुंज, उसका एक ही answer है, which is equities basically. So you will have to believe in the power, you will have to be more methodical about it. जहां तक 1 साल 3 साल 5 साल 10 साल का व्यू है, as I told, मैं इन सारे ही पैरामीटर्स पे बुलिश हूँ. कहीं पर cautiously bullish हूँ, कहीं पर थोड़ा कम bullish हूँ, कहीं पर थोड़ा ज्यादा bullish हूँ. But to me, I think we just ask our clients to stick to their asset allocation. हम कभी उनको ये नहीं बोलते कि आप अभी equity में बहुत overweight हो जाओ because of whatever XYZ reasons or whatever. We will keep harping to them the same point year on year again. अगर आपका equity debt 60-40 है, तो आप 60-40 पे चलते रहिए, unless something dramatic changes in your lifestyle, your liquidity scenario, your requirements, or financial goals or objectives, or so on and so forth. Otherwise, for you and I to sit and decide just because रशिया यूक्रेन में कुछ हो गया, ऑयल में कुछ हो गया, गोल्ड में कुछ हो गया, पॉलिटिक्स में कुछ हो गया, कहीं पर भी कुछ हो गया, फॉर यू एंड आई टू डिसाइड कि अच्छा अब इक्विटी कम कर लेता हूं, अब खरीद लेता हूं, अब बेच लेता हूं, आई थिंक that's not the approach which we follow. So in a long term, if you honestly ask me, I think 3 to 7 to 10 year kind of a view, we have a long way to go. AUM as a percentage of our GDP is only 12%. The global average, I'm not talking US here, the global average is 63%. We have a massive way to go. Like it's not just a small way or something. We have a huge way when it comes to financialization of savings. I don't know how many times this data will get repeated on TV channels, on forums, that we are like 4.8% of our savings into equities today, right? The majority of the Indians are still investing into the yellow metal, still investing into that land which they have never seen or which they'll never go and check out, or which their generations will find very tough to manage and maintain, but they still continue to do that, right? Somewhere the new generation is trying and aligning to the new reality. They are not so much into physical assets as they are into digital and virtual assets, which all of us are seeing a new revolution happening in front of us, basically. So I think that proportion of people investing in financial assets will keep increasing as the money finds more way more into the market. The markets will keep aligning and will keep growing because finally the money is chasing those same stocks or the same blue chip companies and same everything, right? So I think a combination of all these factors makes me extremely bullish, sometimes cautious, sometimes optimistic, sometimes very, very careful. But the overall trend in me, or the overall optimist in me, doesn't change because of few reasons here and there, Nikunj.
There is evidence that world is contracting. Our GST collection, which came 5 days ago, is at an all-time high.
Yeah,
look at our neighborhood right now. There's a problem in China. Russia is becoming uninvestable. We know the unfortunate state of affairs Sri Lanka is in. I love to believe this little bit of channel positioning here. Rise with India, watch ET now. Sare jahan se acha Hindustan hamara. I firmly believe in that. So I'm going to take some questions now. The question from Mr. Vimal Shah, he's an attendee, and I'll throw it open. Anyone can answer that. The question is, rupee cost averaging in a falling market is favorable to investors. How investor can know the rupee cost averaging will not adversely impact the investment return? Anyone can answer this.
Look, finally, I'll just try and attempt that one. If you are doing investing for 20 years, 10 years, 30 years, right? A lump sum, technically speaking, will always work better if your view 10 years down, 20 years down is positive on the market, right? And if you go back in history and see, had you invested a lump sum chunk in 2010, 2005, 2000, whatever, 1995 or any time, and had you done SIPs from then till now, what would have worked better for you? Obviously, lump sum would have worked better, but your conditions, I think it's not about what approach works better. I think finally, after a point in time, when you continue doing a rupee cost averaging or SIP for 3-5 years, rather than averaging, it becomes a tool of accumulation. वो averaging जब आप 5,000 रुपए महीने का कर रहे हो, 5 साल बाद जब आपके कॉर्पस पे वो 5,000 रुपए इंक्रीमेंटली कुछ एवरेज नहीं कर पाएगा, वो आपको अक्यूमुलेशन में ही हेल्प कर रहा है बेसिकली. सो फाइनली आफ्टर अ पॉइंट इन टाइम, इट्स नॉट averaging, it is mostly accumulation. That's my personal philosophy. It's a good tool if your income is sporadic, you don't have options to do that. But if you are like really bullish, you can handle volatility very well. Just go ahead and invest it lump sum and just wait for your money to grow. But I think it's more accumulation tool than averaging after a point in time. For first 2-3 years, it will work as an averaging tool for sure.
Rajesh, you want to comment on this one? When you start your journey as even in a SIP, एक तो पहले लोग मानते नहीं थे, अब लोग मानते हैं, तो they start a SIP but they don't increase it. What is the right way of looking at it? It's like this Hero on Honda ad, fill it, shut it, forget it. But ultimately, it's all about understanding inflation and how to create wealth. Rajesh?
So, Nikunj, I will just give a primer on the last question that, when you're talking about lump sum or SIP, first of all, there is no proven data which is better. SIP is better only because it reduces your risk. It gives you a slow poison kind of thing. If markets are going down, you don't feel that hurt. But I agree with Mohit that in 20 years' time, there's no data that SIP is better than lump sum. And of course, if the markets are favorable to SIP investors, SIP can be doing better. But there's no history of proving that this is better or that. SIP only helps you reduce your volatility and makes you travel that 20 years. So if you are not able to handle volatility, SIP is better. The other thing, which we have been telling our clients successfully is that, it is not, and the theme of the event, not timing the market, but time the market. So if you see any portfolio which start on day one, up to 10 years to 15 years, the component of your investment is more than 50 to 75% of your total portfolio value. Because, the compounding happens only after 10 and 15 years. So if you do a 10,000 rupees SIP for 5 years, you have invested 6 lakhs, and that at best will become 7.5 lakhs or 8 lakh rupees. So on an 8 lakh portfolio, your contribution is 60% and your appreciation is only 40%. So I tell our clients that, for the first 10 to 15 years, it makes no sense where you have invested, what returns you are getting, because 70% of your portfolio value after 10 to 15 years is your own money. The compounding will start after that. So when we suggest SIP to the clients, we tell them that, this is your money and you are saving this money. Returns will come after 10 years. Unless you wait, compounding will not happen. So people have understood this fact that, there's no returns come secondary. Just increase your SIP. And we have been harping, and, motivation is a daily pill. Behavior management, as Loai said earlier, is a daily pill. Every day we have to repeat the same sentences to the client over and over again. And you do the same thing over and over again in the last 20 years about equity and stocks and everything. So, it is a daily thing that we have to do. So every day we have to tell our clients SIP, SIP, SIP. और उनको नहीं भी समझ में आता है तो समझ में आता है ब्रिजेश बोल रहा अच्छा ही होगा डाल दो बढ़ा दो. So and somehow it is working, for us, for the clients. And now the clients, for example, today only our client खुद से फोन करके बोलता है मेरी 2 लाख की SIP बढ़ा दो. So now this concept is there, and last 20 years hard work of all of us together has made this concept very clear that कि SIP करना है तो stretch करके करो, conservatively मत करो. और अगर लोग कहते हैं कि अगर ताकत होगी तो बढ़ा देंगे, मैं उनको बोलता हूं कि ताकत नहीं होगी तो घटा देना. And this works very well.
What a nice thing. So gentlemen, it's been a pleasure absolutely interacting with all of you. मेरे को याद है 2020 में हमने जब वॉयाज डिजिटल करी थी तो उस समय डर था. उसके बाद हमने सेकंड वॉयाज करी 2021 में. उस समय थोड़ी खुशी आ रही थी, मगर इस समय एक जिसे हम कह सकते हैं माहौल ऐसा हो रखा था that everybody is feeling relieved, people are feeling happy, markets are at record high. So that theory of buying the fear and selling the greed once again has really proven true. Keep the belief going. And it's just been such a pleasure to interact with all 4 of you and to understand that the equity cult, what we're talking about, why Indian investors are really changing the asset class allocation. Not only it's a permanent temporary trend, it's a permanent trend. I think that endorsement is very important if it is coming from some of the top distributors. So Sumit, I'll pass it on to you. Thank you for setting up the tone for this session, Sumit. But I think the key takeaway really, Sumit, we've been doing these sessions for so many years now. About the 5th voyage we've covered together. And you remember, Sumit, earlier we had the challenge of convincing people that why equity is better. Now we have to convince people to stick to asset allocation.
Absolutely, absolutely. Well said, sir. Thank you.